And this is your end of day market recap for Thursday, the 15th of February. So I guess officially past the halfway point for the month of February. And wow, what a day we had today in the market. There's a lot of momentum. A lot of interesting macro moves that I will go over as well. Always have that macro minute for everybody. And then we'll talk about some of these market moves. A lot of just, again, interesting developments. You could see obviously on your screen that there's a lot more in the green today. It's amazing when we kind of look at where the VIX is right now, which topped out, I think, around like 1750 the other day and is now back at 14. So, we talked earlier in the week about the possibility of what I kind of refer to as a bout of volatility, like a short-term bout, B-O-U-T, where you get these kind of quick spikes up in volatility and there's really no follow through. And it's just kind of one of those things where the market's priced to perfection and you get a little bit of bad news and the market reacts pretty swiftly to it and it shakes things up a little bit. Right. And I'm not going to go over the VIX chart, but it's been a series of lower highs. Now that could change. Again, we always kind of want to think about risk. So I always, in these videos, in case you're not a frequent viewer of them, I always talk about like what the risk is in the market or some things to kind of consider to kind of help you with your risk taking. For example, I sound like a broken record with this because I feel like I've said it so many times, but we know that February is the third weakest month and for the calendar year. So that really hasn't materialized. Month to date, the S&P is up about 4%. The IWM small caps right now are up about 6% for the month. So that is, by the way, I believe, I'm not a seasonal expert, but I read Traders Almanac and what they put out, and I think they're talking about the second half of February is a bit weaker, but we'll see. There's been so much momentum in this market, and there's been so many, I think, good things. The trouble areas that I have been talking about are interest rates and the dollar, and both of them, backed off considerably today. Now, tomorrow, right, we are going to get more things that are coming out. Today we had retail sales, right? So let's talk about that I'll give you I'll try to do in 1 minute or maybe two, the macro minute. But tomorrow we have the PPI report, right? And they're expecting 0.1, which is a lower reading. So that's what we have tomorrow. We're going to get Fed minutes next week, but this could move the market just like retail sales move the market today, right? And again, like there's no way that, like, in my opinion, I'm not out there surveying retail sales, so I don't know what the number, of course, is going to be. Came in 0.8 versus 0.2. Now, again, right now, this market loves the bad news because everything translates into, whether or not the Fed is going to, the possibility of the Fed cutting interest rates this year. So you get bad news, and what happens? Well, the first things that I look at are what interest rates are doing and what the dollar is doing. So, we can look at that really quickly, and then I want to talk about some more interesting things for the day. So here's the dollar ETF, right? We talked about how a week ago we took out this virgin point of control, right? And then we jumped over it, which was to me which was a bit alarming on that CPI day, right, that we had. But look at we're basically right back in the range. So sometimes these virgin point of controls, usually once they're taken out, they're kind of you don't really have to worry about them so much. But we kind of checked right back to this. So right now, like no breakout in terms of moving higher in the UUP, which is the dollar ETF, right? And we're basically just right back into this range. So to me, that's not that it's not that big of an issue if we hang in here, right? We just don't want to see new highs in the dollar, right? Sideways is fine. And I say the same thing in TLT, right? So we're going to look at TLT. And again, you have to kind of get your mind around this because when we look at TLT, it's the inverted between what interest rates are doing. But here we are, and we've got one more day of the week. So I'm not going to say do a victory lap when you have one more day of the week and you're looking at where this is on the weekly chart, a daily chart, but with the value area for the year, right? And if you want to look at this, right, and by the way, so there will be some resistance up here at the bottom of value, but let's go ahead and let's look at it on the weekly chart. I'm really going over the 1 minute macro segment, but here's where we are, which kind of gives it a little bit more a clearer picture. But I want to see this 92.66 hold, right? And then if it does, and this kind of holds in here, then I don't have to talk about what TLT is doing every day, which again, it's not my favorite thing to look at the macro. I'm more of, I'm not trading TLT really. I'm not trading the dollar. I'm just using that for an indicator, right? And speaking of indicator, what's the most important indicator, right? That's price. Right. So again, these things are important to kind of pay attention to, right? So I want to talk about just get this chart correct, because I think one of the themes for today was just a really strong breath. Right now, I've talked about this before. Right? In fact, I tweeted this out earlier today, just talking about the NYSE and the NASI, which gives you a good sense of like whether more stocks are going up or going down. Right, and right now, this line in the NYSE has been kind of flatlining a little bit. Right, there's been a little bit of a tug of war. Right, some days we don't see as many names go up as they go. Like I look at the 4-week new highs list, right, and that's something that I put out on Substack here. Right, here's our midday note. Right, and by the way, like if you're not signed up for this, please sign up. It's you can get a glimpse. Half of it is free every day. Right, if you want to see my positions and new charts where I'm adding positions, then you have to pay, and it's cheap. It's $40 a month. Right, it's nothing. To get the information, to get, in my opinion, really good information. That's so it's ttgtrading.substack.com. But at the very least, like you could browse, it's for free. And I actually send out right now, I don't know if I'll continue to do this forever, but I send out 3 of these. So what do I do in the morning? I send out important index levels, right? S&P, Qs, IWM, right? And then I talk about one stock that's trading, that has the potential to break out, right, on multiple time frames. I call that the out of the box report. In the middle of the day, what I talk about, I try to like basically give everybody a glimpse and as much information as possible, and you can run through this in about like 45 seconds. Right, so one of the things that I look at is more 4-week new highs versus lows. Right, so it's kind of another measure of breadth than what I just mentioned, the McClellan summation index, which is just telling you basically not new highs or new lows, but whether stocks are going up or down as in terms of overall. Right, so when this line starts to move up, and I think we will get the crossover today. This is not updated for today, but we will get this now above the 10-day moving average. So we've had a couple days where the breadth has been particularly strong. So this should move this up and should give a buy signal for more names going up versus down on this summation index. Now, again, like why is that important? Because it just makes an easier trading environment. Like even if you're not a good trader, have no edge, and you pick 10 names out of a hat, right? You want an environment where 7 of them are going up and 3 of them are going down. Right, when there's poor breadth and it's the other way around, it's much harder to be a stock picker. Okay, so that's why this is important. But another measure of breadth is to look at 4-week new highs or 52-week highs. But there you have it. I mean, look at the areas, right? And I know tech is getting so much attention with SMCI and Nvidia, just going bananas. SMCI over $1,000, but it's really like tech has not been the standout. It's been more things like healthcare, and even though healthcare wasn't really on the list that much today, but it's really been industrials that have been the one that I've seen the most. Financials too are doing really well. So it's kind of interesting that we're seeing just a lot of other areas, and that's been the case now. Again, if you watch my videos regularly, I've been talking about the industrials, healthcare, transports, which are breaking out as well too. So really nice, not much to complain about today in terms of breadth. And yeah, so let me continue here because I do have like what I think is a pretty good trade idea here. Which is basically, so this is the RSP, right? So it's the S&P, like SPY, or the S&P 500, but instead of market cap weighted, it's equally weighted, right? And what you have here is this is resolving higher. So I find this very interesting, and I find the pattern very interesting because it's kind of an inverted head and shoulders. You can see that I've got a neckline drawn, and price is now breaking above here. So I think that this could continue to push higher, But that means some people like when breadth expands, some people don't. For example, if you're only trading a couple stocks, like if your stocks are Nvidia and SMCI, then you don't care about the rest of the market, right? Because those names have been working really well. If you want to play like a little bit more of a diversified type portfolio and trade different sectors, then absolutely you want an increase in breadth, right? But you have to be careful with this because, one of how I try to kind of prepare, a trading room for the day. But I just said I didn't think it was going to be a tech day or, a big day in terms of, the Magnificent Seven or Eight, whatever they are, right? And it's funny, the one name that seems to always act as an outlier to the rest of its group is Tesla, right? Tesla goes up when the small caps go up, for the most part, generally, right? But you could see, there's only a couple of them, and we did highlight, and I highlighted in yesterday's video these two stocks, Meta and Netflix, right? I thought that they looked the best out of the group, but you could see it was not in every, it was not these stocks that were completely green because when the dollar goes down and rates go down as well, people begin to get their money out of some of these safety type plays. Safety plays because a lot of them have a lot more cash than some of the other areas of the market. So you do begin to see a little bit of a rotation out of these and into some other areas. Well, what other areas, right? Well, look at energy stocks were up, and look at how much value outperformed growth for the day, of 1.2% versus 0.2. So if you could slice it that way, value versus growth, but you could also slice it a few different other ways too. So let me just continue with this thought. But the banks were super strong. Metals and mining was very strong. Look at this stock. And this is a member. I've had this name in the TTG trend portfolio for a good number of months. But this is Reliance Steel and Aluminum. This had a huge move today, right? Really, really nice move today, and for a steel and aluminum stock to be up as much as it was today. So really nice earnings gap that will go on our earnings gap list, and impressive. So we can kind of go through and we could look at a couple other sectors, but XLF. Now I believe this took out a Virgin point of control, although I don't see it right this second. But nice move. This is we're at highs here for XLF. Right. I know I've been talking a lot about the industrials, but they continue to chug along, right, on really good breadth within the sector. I've been talking a lot about transports, right? They moved higher, right? So just to kind of look at some of these sector ETFs first. I mean, now again, I feel like they cheated a little bit with this ETF because they did put Uber, and I believe Lyft is in this ETF too. So, which I think it is. It's not really cheating. I think Uber should be in this ETF. But normally when you think transports, you think rail names, truckers, and airlines, but they did put those names in there too. All right, so that's IYT. Next, I was going to talk a little bit about what healthcare is doing. XLV back out to new highs. Again, I've talked a lot about this chart since we started the year and the possibility of a breakout. Look at what you have going on here, right? So very impressive. Look at the trend on the weekly, so very nice to see healthcare. And again, people neglect, even if you're trading options, they are so cheap in XLV, right? It's just such an easier trade, in my opinion, right? The implied volatility is so much less than the overall market. And when it gets going, it could really get going and trend very nicely. I'm also long. I've been long some XBI too, right? Here's what this looks like on the weekly chart, right? So this is taking shape too, right? Notice, and again, the week's not over. I'm looking at a weekly chart, but look at the last time, like it tried at the beginning of the year, it tried to go higher and kind of stalled out here and a little bit of a rejection. But I think this is in good shape. And so that's what excites me about the market. Now we can go into some individual names, and a couple names that I traded, but I just found that really impressive. Here's our watch list for the week, which again has just been chugging along. SMCI is up 24%. As I mentioned, I didn't have that on the weekend watch list. I wanted to see a little bit of a dip. I mean, it's been amazing. So I'll let somebody, I know there's plenty of other people talking about SMCI and NVIDIA. I like to give you more of a bigger glimpse of what's going on out there. But look at this MOD really has had a nice move. Crocs had a nice move today. I continue to favor, so we could look at Crocs really quickly. But here's what the weekly chart looks like. All right, we'll move this to daily. Right. I think that this, it did move right to that VPOC. If it can hang above there and continue, it could move to 130. Oh, Tesla. I wanted to talk about that one because it got a lot of attention today. Right. So Tesla, I think is interesting. It's because it kind of got out of this little pattern here. Right. And I think it could push to the bottom of value. Notice anything that's green means bullish yearly, the 80% bullish, 80% bullish rule, right? Which means that if you start the value area either, in this case, below, right, and you break in, there's an 80% chance that you could go from one end of the value area to the other. Now, this is for the whole year, right? We're looking at a yearly value area. So this is 2024 year value area. Now, I think that's a lot for Tesla to do personally, but do I think it could go to the bottom of the value area for the month of February? Sure. Right. And that level's at 205.90. So that will be a little bit of overhead resistance. And that would also close the, I believe this was the earnings gap. So Tesla for a trade, if breadth continues to expand and interest rates don't go higher, then I think that that's in play. I traded, a couple of names that I traded today were Elf, which kind of went quiet. People went quiet on this name, even though they had really good earnings, right? And sometimes what it does, that's what it does, right? It gets the attention away from it. Here was my setup from this morning that I talked about in the TTG pre-market session, and I talked about how it just had a nice entry point, which was the bottom of the value area, and it went all the way through. So I took the majority of the trade off, right? So showing you trades, which no one else does. Yeah, you could see I just took 15, and I just took profits along the way today, kind of like a day trade type thing, but I kept 15% of the position on, right? And now now that we've kind of looked at the 1 hour chart and this fulfilled itself, going from one area of the value area to the other. Next, we're going to look at the daily chart, right? And the thing that I like here is price is back above the 5-period moving average, right? And it spent some time consolidating. That's perfectly normal in my opinion, right? It's okay for stocks to do that, and now starting to resolve higher. So that was one of my trades for the day. And then I mentioned healthcare, but this was a trade that I put on yesterday. It was actually a member brought this to my attention. But look at GE Healthcare. Nice day today, up about 3%. Little bit of consolidation there right at the top of the value area, and nice climb higher. And that brings me to the next one, which is Oscar. So again, it kind of helps to go through these names. I've mentioned in yesterday's video that I have a list that I have in FinViz, which has all the earnings strength names. These are two of them, right? And notice the little consolidation in Oscar after this gap up. So just spent some time there. I had an alert on this name, and I went ahead and got involved in this name, and really nice move for the day, up 8% in Oscar. So that was also a nice trade as well. What else did I want to go over? Maybe just a couple of the energy charts, which I think are shaping up too. Here's XLE. Again, I really haven't been involved too much in energy, but you can't argue with that candle. Now, it is overall inside the value area for the year, but it did break the value area for the month. So I think, pretty decent there. So that's it. I'm going to leave it there for today's video. I actually unwound a couple of, I love, when you have a strong day like this and a lot of things are working, you can really kind of sell, and you could pick some of the trades that are on the bottom of your lists. I will get rid of some names that weren't working. ServiceNow, I've been holding that name for about a week or so. I hit 2 targets much higher, but just decided to take the last piece off, right? And so on and so forth. But that's it for today's video, guys. I think the financials, I'm not going to review the financials charts too, but I think that there's a couple of them that are really interesting. Guys, have a great night, and I'll see you tomorrow. Also, one last thing I forgot, right? The indicator that's on our charts, right, for TradingView, right? You can go, ooh, I don't have it up here, but you go to marketwebs.com and you can sign up for the trial for free, right? And we have a video on it too. You know, we did about an hour and a half webinar teaching people about, you know, how to install it on your charts, how to do some customization, and you know, basically how to use it for trading. So that's available too. Have a great night, everybody. See you tomorrow.